All right, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group. Today is February 14th. Happy Valentine's Day. And what a day it was. And we'll start with what the market was kind of, market seemed to be holding back the buyers. We had today's CPI report, and sure enough, it was an uptick in inflation. However, I think the market was expecting this. The market kind of came to grips with this about a week ago when we saw wages increase a little bit. So sure enough, yeah, an uptick ex food and energy 0.3, so up a tenth of a percentage. Without the food, without the ex food and energy month over month, it is showing an uptick. Tomorrow we get the PPI report. So very big knee-jerk reaction pre-market, but again, the market coming to grips with it, and the buyback machines are back on, and people want to buy. People want to buy the dip, it appears, both I think in corporate buybacks as well as institutional flow, and and then there was a lot of inflation-driven trades that we basically have been seeing for the last week or so. We've been seeing a lot of buying in GLD and gold in GDX. On Monday, there was a big GDX trade. So these were up huge today. Gold was up 1.7%. GDX and GDXJ were both up 4.6%. And really, if you've been a member of the room or if you've been paying attention to option activity, you don't really need to speculate too much on these things. You can kind of just take a look at what's been going on the tape. And then, what I kind of also add to the equation, which I think a lot of people don't, is I talk about, what's going on in the ETF world in cash. And all throughout the week, I put this on my Twitter feed. There's been gold, but there's been nugget call buying, which is levered 3 times levered GDX, as well as JNUG, JNUG. There's been big inflows into that ETF this last week as well. So I talked about this is the information that you get in the Tribeca Trade Group weekend newsletter that is invaluable, right? I mean, you get a sense of where the positioning is going on before these events are taking place. So that was not something, even in the metal, we didn't see a ton of inflows into GLD, but all of the gold mining ETFs really saw a big uptick. And when you see that those inflows happening both in cash and then the aggressive call buyers going up in the same group, something is up, right? So those were knockout winners if you had any of those. And then also just other trades that we've been seeing is a lot of buying in the steel group. I'll talk about the major indices, but really some of these groups had just major outperformance. STLD was up 4.3%. We managed to catch. So this went up yesterday, which I talked about in yesterday's video. Also Alcoa, which I didn't really look at today, but that did fine. That was up 2.6%. That was a weekly call buyer. And then today they hammered MT calls today. So we caught this in the room. This was a hell of a winner that we saw in the room, and actually put this on after, it wasn't even the first call buyer that I saw in this one. It was the second or third. Once they come in and they keep buying over and over and over. Looks like Trade Alert doesn't want to work with me right now. Oh, there we go. You see 14,000 of the May 2nd, and all of these, or the majority of these prints, little prints that went up that are being swept, that are going up, above the ask. You can see the first one there right on the top. That was at 12.35. So you had a chance. They were buying these. They started buying these at around 39 cents. I think I got in here at 48 cents and was taking targets a dime higher, as well as up to 68 cents. I left my last piece on, which is perfect, right? I mean, you take a couple targets, you take the majority of the money off the table, and then you leave a runner on. So again, it's a short dated play, so maybe I hold it Thursday, Friday, and that's it. But I think I just have literally a 5 lot on left. I think I had a 25 lot and just have a 5 lot left on. So so again, just paying attention to this stuff, it becomes fairly I don't want to say fairly easy. I mean, you do have to pay attention to what they're going after. But really some good signals. So overall markets, and then I'll go back to some individual names. But we've been talking about this day by day, just a little bit more. A little bit more progress and constructive price action since Friday. We've been building, so we are coming. Again, I'm always going to talk about a little bit of the negative too, or the risk. But we've had a hell of a run the last 4 days. We're going to be coming up to the 50-day moving average. So at this point, if you've been doing what we've been doing and kind of adding into this 200-day moving average, now is the time, I think, to not take all the money off the table, but really not be putting on too many new trades, taking some money off the table, and then letting the winners run a bit. So being that this is where we got stuffed the last time, which was the 50-day moving average, NASDAQ continues to show the strength. Look at the Qs. That's way above the 50-day moving average. So I'm trimming around the edges. Micron was a big winner that I put on Friday, position that I had already had on, but I added to it into this when we saw some big call buying in Micron. So this has now made a move from about $40 to 43. So that's a nice percentage move. I've been taking targets in this one. I'm in a January position, so that's it. To take a couple of those targets off, up 15% or up 30% from where you bought the calls, and then let the rest stay on and let it work for you. In these markets, just where I've kind of learned and gotten better as a trader is not to over trade, and not to manage your positions. Some of the positions that I added last week, they were underwater a little bit, and I just kind of said, hey, let's give it time. Let's like a fine wine. Let's let it breathe a little bit. Let's not overmanage. Let's give it a couple days. The VIX started to move in the right direction, and just didn't. Just took a little while. But this is back up below 19, and we've certainly seen call buyers step back in. There's been a lot more risk taking. It's really since the VIX got back under 25, I would say, and it will definitely under 30. And then there's been just more. We could see it just through the option activity. More and more option activity and call buying has come out since the risk has been dissipating since the the implied move of what the market is expecting is all the way back down to 19. So that's in a much better place than where we were a week ago when we were at like a 35 VIX. Even we hit a 50. Obviously, just remember where we've come from in such a short amount of time. So be patient. A lot of what I'm doing, I'm really not over trading this market. Again, that's probably something that I've done years past. Is I was like, oh my God, the market is moving. Let me quick take all these targets. I'm kind of just letting. I am taking some targets, but I'm just not over trading back and forth. And just being a little bit more confident in some of the positions that I've taken, and then just letting them go. So other areas of the market, we talked about the gold miners. XME is another area which has both the gold miners and steel names in it. That was up 3.9%. Then the banks. We've been seeing again. Some of these trades that we've seen the last couple of days, you kind of just have to take a shot at some of these things. KRE looks great, and it kind of looked like it was. I think we talked about it in last night's video. It looked like it was starting to turn the corner, as well as the rail names yesterday, which I know I mentioned that in last night's video. But again, with the move in interest rates, right, which even that really didn't phase the market. TLT was down another 1.1% today, and we did take out the lows of the bonds, close to it in the long bond. Let's just see TLT. I think TLT did touch a 52-week low. So rates are continuing to move higher. You could also look at IEF, which is the 7 to 10 year. This is a little bit more convincing to the downside. But when this goes down, generally what should work is banks. And we did see a lot of again just not only looking at option flow. If you're just looking at option flow, you're only seeing really a portion of the puzzle that's out there. So I mean, look at the volume today, for example, in the KBWB ETF. What is this ETF? It used to track, before there was ETFs out there, everybody used to talk about the BKX index. That's the money center banks. So your biggest banks, your JP Morgan, your Citi, your Bank of America, your Goldman, your Morgan Stanley, those are all in this KBW banking ETF. And it traded 2.3 million times normal volume today. So it doesn't get that much attention on a day-to-day basis, but traded to trade double the volume, and it definitely looked like there was some buying going on in there. So this is KRE. I mean, these kind of look the same. This KBWB, of course, is going to be is an extremely liquid basket, but it kind of looks like that regional banking ETF. So I think this is a great place to be as rates continue to go higher. And the chart setup is really looking nice now, just above the 50-day moving average. So yeah, if you put on a position today, which again, the signals that we've been seeing is call buying. I think we saw it on Monday. We saw calls bought and puts sold. That was the second or third order that we saw in the regional banking ETF, which again, the regional banks are going to be more sensitive, I think, anyway, to the interest rate moves. But they're not at 52-week highs, and they're moving with some nice momentum. Again, look at the volume. And I think even if we look at KRE, you'll be able to see that volume as well. You want to see good volume on some of these moves in these sectors, and sure enough, you could see decent volume. In the overall SPY, that's something where you don't want to see good volume. That indicates what we saw last week in SPY was just heavy volume, heavy sell volume, and that was unwinding. So you don't really want to see more of that. Remember how most of the time fund managers buy, or institutions buy. They buy incrementally. When they sell and get rid of positions, they do it very, very quickly. But usually it's incremental buying. So I see that every once in a while, and I see people get that mixed up, that they want to see volume in the major indices kind of confirm the move. Nah, you want to see volume in individual names when they on a breakout. You don't want to see big volume all the time in the indices. I mean, take a look at the SPY volume and this whole leg up. Look at how light that was. I mean, maybe it ticked up a little bit here, but not comparatively to the sell-off. So when you see this type of volume in SPY, usually something bad is going on, not something good. All right, so that's a quick wrap up in sectors. Just a lot of other groups that did very well today. The FANG stocks, which today kind of seemed secondary for the FANG stocks, but look at this FTN, which is my FANG proxy. Because Google, Amazon, Netflix, and Facebook are your biggest weights in this thing. I went long this thing. You could see how my cash portfolio is performing. I really unwound a lot of names in the last couple of weeks, being very methodical and being very confident in my system. And you could see, I'm outperforming the SPY 6.6% versus, the SPY's up basically 1% for the year. And, I'm doing just a really kick-ass job here. I added 3 new longs this week. I went long emerging markets, both in EM and MCHI, and these things are up 3%. Just in the MCHI I added yesterday, and it's up 3.1%. There's a lot of Chinese internets in that ETF. It's kind of a combination of FXI and KWEB, the Chinese internet ETF. So it's not completely 100% technology. It does have some banks in there as well, but up 3.1%. Speaking of that Chinese internet ETF, which has just been absolutely on fire, up 4.5%. So some of these trends from last year, which KWEB was probably your best performing ETF last week, has been doing really, really well so far this year, and a lot of that is because of the earnings. I've also been long. I got long BABA yesterday for a day trade, and I rolled it out to some June calls. Perfect, right? I mean, look at this thing. Retake the 50-day moving average. So I actually did not. I took one target in BABA, and in the June calls today, and letting the rest go. I really like the chart here above the 50-day moving average. Maybe I take another target up at 194, that top of value. Couple other names, new names that we saw today. Already mentioned, I think, enough about the gold and gold miners. They basically, this is the momentum stuff. When people are kind of caught a little bit off guard and they're looking to ride the momentum, they buy Nugget, they buy GDX, they buy GLD when it's already moving. Granted, again, we saw most of this paper go in to the ETFs as well as call buying, about a week ago. Facebook, they really went after Facebook calls today. Facebook, for whatever reason, just did not participate yesterday. And a nice big candle today, up $6, 3.7%. Again, a lot of these names have had good earnings. I think Apple did okay today too. I did not play Apple, but was up 2%. Now back firmly above the 200-day moving average, so doing really well. So a lot of just progress and good constructive price action. A couple other names, Micron. I already talked about Micron, but they bought more Micron calls today. A little bit of energy buying. Crude, in addition, which is, go figure, inflation, right? Crude has been moving down pretty hard the last 2 weeks. Finally got a bounce on the inventory numbers. A little bit of surprise, not as big as of oil inventories. So this got a nice bounce today, and we started to see a little bit of call buying come in. I actually took this trade PTEN. The name's gotten absolutely blasted. This will be a very short-term trade for me. They bought a big block of March calls in this one, but it just looked like a pretty good trade. So I'm not going to go over every transaction that hit. Yeah, it was March 20s here. They also bought some PBR, which I'm already long. Great beer. They brought a little bit more of Taiwan Semiconductors. They bought a little bit more of SMH. Applied Materials was 2.8 basically through earnings. For whatever reason, these semiconductors keep putting up good numbers. And now, granted, Applied Materials did run into the report, but you could see it's just up a little bit. So again, ran into the earnings report today, but we're continuing to see some call buying going into SMH, TSM, and a couple other semi names. Obviously, Micron is the big name that we're seeing the call buying. One last trade to detail here. Actually, two more things. There's a lot of buying in pharma names today. ALXN, AbbVie saw some call buying as well. AbbVie we detailed in this weekend's newsletter. Really nice looking chart. So like to see this one. It's all about getting ready, and having this set up. So when you see the call buying, either you get in before the call buying, but it's so much better. And that's also what we do differently is we get in before the call buying starts. So many guys are out chatting about this name and that name. It is so much better to get in the name before the call buying occurs, right? It's all about doing your homework and working on the setup. Once you see the call buying and you're already in the name, that's kind of the icing on the cake. EXP, this is really interesting. So this is a good example of a name that you may not be in, or something that's a little bit different. This is Eagle Materials. We've seen call buying here in this name a couple times now, and notice where this is, right on the 200-day moving average. Summit, which reported earnings and had good earnings, which is a similar name in the industry, was up 9% today, and no move out of this EXP. So somebody may be scratching their head and saying, why isn't this name up? Also, VMC was up a little bit today, and that name reports. So perhaps somebody's positioning themselves in this EXP for the next report out of this materials group. All right, so that's it for today. Great day all around, and not just obviously today, but doing the setup in the last week. Really paid some dividends today. So thanks for watching today's video. Have a great night. Have a great Valentine's Day. Thanks, everybody.